Welcome back. We are now seeing NVIDIA hitting new all-time record highs, passing the $5 trillion market cap mark. First time in history this has actually occurred with a stock. And we're also hearing from Michael Saylor, who is continuing to kind of push his financial products and also the MicroStrategy stock. But as you guys know, we are at the end stages of the Bitcoin cycle. And for MicroStrategy, they have a lot to be nervous about when it comes to stock valuation and price, because as you guys have seen, most of the Bitcoin treasury companies have gone down over the last 6 months, just 95% or more. And this is before Bitcoin has even really come down under $100,000. And now we're hearing some of these Bitcoin treasury companies and Ethereum treasury companies are selling their coins, something that they've promised and stated that they're never going to do, because that's anti what their thesis is. But in today's video, we are going to break down what is happening with NVIDIA, what's happening with this pivot. As you guys know, we always talking about pivots. What is the big trade? What is the next trade? And in my view, the Bitcoin cycle is effectively over, and we're going to cover that. We're going to cover the Bitcoin treasury companies. We're going to cover the AI pivot, the quantum computing pivot. We're also going to talk about XRP losing market share to the likes of Circle, to the likes of some of these other companies that are really driving the cross-border payments. And this conversation, a lot of people in the crypto space don't seem to want to have about realistic expectations in these markets. And this, as we are seeing thousands and thousands of layoffs across the board. This is the Cryptoviser podcast. Make sure you guys are subscribed to the channel. We upload every single day to bring you the latest happening in the financial world. Also, don't forget to give the video a free thumbs up. Let's get right into today's video. Now, as you guys know, on this channel, we talk about the macro environment, and sometimes we talk about individual cryptos or individual stocks, but today we're talking about the macro, which is really the zoomed out picture of where we are in the economy, where are we in the markets, am I bullish, am I bearish, generally speaking. And by the way, just because I'm necessarily bearish on crypto doesn't mean I'm bearish on every crypto in existence and every stock in existence, right? These are different areas of the market that we have to be able to position ourselves appropriately if you want to make money. I mean, I've been seeing these comments on social media, on my channel, people saying, oh, I'm just going to ride this down. And it's like, if you think that the stock or crypto is going down, why are you going to ride it down? That doesn't make sense. This is anti-investing. And so when we hear that, we trade against that. If they're going to write it down, perfect. Here, you buy what I'm selling. And when we get to the bottom, I'm going to buy what you're selling, because you're going to have to sell, because all of your investments are going to be down. And we have to understand where we are in the general economy, right? NVIDIA has just passed $5 trillion market cap. And we're going to be getting to the Bitcoin treasury companies, the Ethereum treasury companies, XRP and Ripple in just a little bit. But before we get there, it is very important that we understand the general economy. The Federal Reserve just said at the end of October that, yes, they cut rates, but they are waiting for data. They also said that they're not seeing massive employment, or I should say unemployment risks. Meanwhile, we're literally seeing tens of thousands of employees getting laid off. And a lot of these employees are taking severance packages, meaning that they're not going to show up in the unemployment data potentially for several months, or potentially ever, because some of the severance packages, they pay for 90 days, they pay for 6 months. So that lags the data. But we know that they're getting laid off, and we know that they're going to have massive competition, because if they're working at Amazon as whatever they did, engineer, customer support, whatever the situation is, now they're up against not just all the employees that were also laid off at Amazon, but they're also up against all the employees that were laid off at all of these other companies. And this amidst the AI boom, which is reducing the need to hire more employees, even if they're not laying people off. And so people are in the situation that they can't necessarily find another job or find another job that pays the same amount. And how is that going to affect the overall economy? Now, I do think that this will correct at some point and we'll get back to normal and people will, have jobs or there'll be some kind of universal basic income or whatever. But that is in the medium to longer term. We are now in the short term in the midst of all of these employee layoffs. And these are publicly traded companies and private companies. We don't get the data. And so understanding that that's happening, which is a net negative for the economy. But meanwhile, NVIDIA is at $5 trillion. This is more than double the entire market cap of Bitcoin and more than the entire market cap of the entire crypto market combined. But what are we seeing? NVIDIA, just in one day alone, announced a partnership with the U.S. Department of Energy. We're going to get to that in a minute. They announced 7 new supercomputers for the U.S. government. They announced $1 billion investment in Nokia. They're set to announce an AI partnership with Samsung, set to announce a partnership with Hyundai, and announced a $500 billion in expected business over the next 6 quarters. The AI revolution is even bigger than you think. And we even heard from the Federal Reserve Chairman Powell, that the AI situation is not a bubble because there's going to be continued expansion and investment into this space. And so for us as investors, we've already been pivoting and moving into the space. Now, that doesn't mean that we're not going to have a correction or a corrective phase. We could, especially if the macro markets drop. Because again, if we see that the stock market is at new all-time highs, a lot of that has to do with the NVIDIA market cap, because NVIDIA, just $1 or $2 move in the price can push the price billions and billions of dollars in market cap to the upside or the downside. So we have to keep that in mind. But let's hear from this CEO of NVIDIA, Jensen Huang. And by the way, we also have to remember that just recently he said that NVIDIA went from 95% market share in China to 0, completely out of China. Now, apparently that was 20 to 30% of their business. So some of these announcements, in my view, are to offset that, right? Because if NVIDIA, the largest company in the US by market cap, loses 20 to 30%, this is going to, think about it, 20 to 30% of the stock price would basically bring it down to about $150. It would bring the market cap down over $1 trillion. And what would that impact have on other companies and on the overall stock indices? It would be really bad. And so I think that some of these announcements are trying to keep everything propped up. And it may work, but it also may lead us to an even bigger correction in the medium term. Even if you just look at the stock price of Tesla, for example, just in the last 1 year, at the end of 2024, it went from $479 in December to March, where it went to $200, which was a 53% decline in just 3 months. And it's also an over $1 trillion market cap. So this could happen with NVIDIA. But let's listen to Jensen Huang.
The Department of Energy is partnering with NVIDIA to build 7 new AI supercomputers to advance our nation's science. I have to have a shout out for Secretary Chris Wright. He has brought so much energy to the DOE, a surge of energy, a surge of passion to make sure that America leads science again. As I mentioned, computing is the fundamental instrument of science, and we are going through several platform shifts. On the one hand, we're going to accelerate computing. That's why every future supercomputer will be GPU-based supercomputer. We're going to AI, so that AI and principled solvers, principled simulation, principled physics simulation is not going to go away, but it could be augmented, enhanced, scaled, use surrogate models, AI models, working together.
But how does this impact you? And how does this impact jobs in the negative sense? And they're moving so rapidly here that it's not giving the economy enough time to adjust. And that's where I think we're going to have some issues. But meanwhile, in the crypto space, we have David Bailey, the CEO of Nakamoto, which is already down 97% in 6 months, saying the market demand for treasury companies is about to explode, retweeting that the S&P Global Ratings Agency has assigned MicroStrategy a B- issuer credit rating, which is effectively a very high-risk junk credit rating. No, guys, the treasury companies are not about to explode. They're about to implode. And why are they about to implode? Well, the price of Bitcoin has barely dropped from all-time record highs. I mean, we're still hovering, when I'm recording this video at least, in the above $100,000 range. What happens when we go under $100,000? These companies are already down 95, 97%. And MicroStrategy is the largest. They have the most access to capital. But as I have said, as Jim Chanos has said, as many other smart, I guess, investors have said, MicroStrategy is going to continue to dilute the shares of the company to pay the dividends, to buy more Bitcoin. And we're starting to see that trade roll over because people are saying, wait a minute, this is not a good trade. And it hasn't been, right? Bitcoin is at all-time record highs. Meanwhile, just in the last 6 months, when I called the top of the market in the middle of the year, I called it in July, June, July, people were saying, Cryptoviser, you're an idiot. We're not at the top of the market. How could you say that? Look, MicroStrategy is down 40% just in the last 6 months. And meanwhile, Bitcoin's at all-time record highs. How does that work? And by the way, we're down 40% and Bitcoin has barely even dropped yet. And so if you have been following my thesis and maybe following the strategy as well, all I can say is my bets against the MicroStrategy stock, not the company, but the stock, have paid way better than being long, even any cryptos. And so now Michael Saylor is trying, and by the way, the MicroStrategy bulls are like all over this, but Saylor is basically telling you that you can get 10% tax-free dividends from Stretch, saying the tax equivalent yield is 16 to 20%, because now they're basically stating that they're going to code it as return of capital versus a dividend, which is a different taxation type of situation. Let's listen to what he says. And by the way, again, this just goes into the financial gibberish, basically trying any possible way to get people to buy into these debt products to then go buy more Bitcoin. But again, no business model, no cash flow, no actual model for a bear market. And every company that has not had a strategy for a bear market and just continued their bull strategy, their bull market strategy in a bear market has collapsed. Last cycle, it was the Bitcoin mining companies. Core Scientific went down to 5 cents and went bankrupt. It was also FTX, BlockFi, Celsius, Voyager, 3 Hours Capital, and all of them, because they didn't realize, they didn't understand how the market cycles work. I don't understand how that's possible when they're the largest companies in the world and hiring the smartest people, and they had no bear market strategy. Well, that's what we're seeing happening here too. And so now they have to convince you to keep putting your money into these products as we're entering a bear market. Let's listen to what Michael Saylor says here. And by the way, don't forget to give this video a free thumbs up. I try to give you guys the best possible analysis and opinions every single day right here on the channel. These are just my opinions. I could be wrong. Do your own research. And if you disagree with my thesis, let me know down below what your thesis is and why you disagree with mine. Let's listen in.
And talk to me about the nuance of being a tax-free dividend yield that you're looking at here.
Yeah, well, the beauty of a digital credit instrument that's issued by a treasury company like ours is we fund the dividends by selling equity. And when you fund the dividends by selling equity, then the dividend becomes a return of capital. And as a return of capital, it means there is no tax on the dividend. So when you're getting 10%, you're getting 10% cash dividend yield. And what happens is your basis in the instrument is reduced by the cash dividend. So if you buy a $100 share and you get a $10 dividend a year, then your basis goes to 90, and then after the second year it goes to 80, and after the third year it goes to 70. But for the next 10 years, you have no tax. You don't pay qualified dividend, you don't pay long-term capital gains tax, you don't pay ordinary income, you just get a return of capital. So that means the tax equivalent yield of one of these instruments is like 16 to 20%. It's like a bank that pays you 20% interest. And so that's a very special thing. It's because we're built on Bitcoin. A treasury company built on Bitcoin is the most tax-efficient fixed income generator in the world.
Now, many of the bulls are going to ignore what he just said, but at the end of the day, he's saying if you hold for 10 years and it's tax-free dividends, right? So you have to hold for 10 years in this very high risk, very untested, and very volatile product, to be honest, because it's connected to Bitcoin, which is a very highly volatile product. And what have we recently seen with these companies? Well, Sequence, which is one of the Bitcoin treasury companies, transferred $111 million in Bitcoin to Coinbase. And why would they do that? Well, most likely to sell. And this is not the only company that we've seen doing this, right? Ted Pillow said this is not a good sign. This is the second treasury company that is selling tokens. Sequins just sold $110 million in Bitcoin. Now their website still shows that they hold the Bitcoin. It has not adjusted, so maybe they haven't sold just yet. But why are they transferring their coins to Bitcoin if they're not planning on selling? Now people are going to say, but Cryptoviser, you're just being a bear. You're just being fudding. Well, let's look at the Ethereum side. ETHZilla sells $40 million of Ethereum as part of a $250 million stock repurchase or buyback program. So they're already capitulating, right? They're already capitulating. And you have the company that's down 97% in 6 months. Nakamoto, their CEO, is saying that the market demand for treasury companies is going to explode because MicroStrategy has a junk high risk rating for their debt products. Guys, this is so bearish. It just makes me want to double down. Like anytime we're seeing a bounce in the MicroStrategy price, in my view, it's a short. It is a short or it's a bet against the company, right? And it's not a bet against Bitcoin. It's not a bet against Michael Saylor. It's literally what he said in that video, right? To fund the dividends, they're going to sell equity. They're going to sell shares of MicroStrategy. So if you know they're going to sell shares, if you know that we're going to go into a bear market, you know there's going to be a correction in the Bitcoin price. These are all negative for the MicroStrategy stock. And there's bulls out there that will say, no, crypto, you're just being fuddish. You're just spreading FUD. Well, they're telling us, without telling us, that they own quite a bit of MicroStrategy and they're going to lose. I mean, this is math, guys, right? Jim Chanos is not short to, FUD your bags. He's not short MicroStrategy because he hates the company. He's literally doing exactly what Michael Saylor is doing, selling shares of their company to you. Well, probably not my viewers, because many of my viewers are pretty damn smart. But yeah, guys, and by the way, I'm recording this. The day that I'm recording this, they're posting their earnings. And what did we see happening after their July earnings report? I mean, hello, look at July. Boom, straight down. We're down 40%. But meanwhile, that was their first quarter of the new accounting practices that allowed them to show their unrealized gains in Bitcoin as revenue. And what did Wall Street say? Nope, this is bullshit. This is complete bullshit. And sold off. I mean, the fact that there's people who don't see this, and by the way, some very smart investors don't see this or are oblivious to it or don't want to understand how this is operating. It's like, we're here to make money in the markets, guys. We're not here to hold a debt product where they're going to sell shares continually to pay dividends to me, right? That is literally the definition of the P word, Ponzi, right? And so I'm not doing that for 10 years to just get debt free. I mean, tax-free returns, that's ridiculous, right? I'd rather pay taxes and get hundreds of percentage of returns in, a few years. And again, if you're bullish Bitcoin, just buy the Bitcoin. Why are you buying? Why are you getting involved in these treasury companies, which are already capitulating? They're already capitulating. Nakamoto is down 97% in 6 months, and Bitcoin price has barely dropped from all-time record highs. What do you think is going to happen? People are like, no, I'm buying it right now. We have investors saying, oh, this is the best time to buy. And I'm like, no, it's not. Because when Bitcoin drops, this is going to drop way further. And you know what we're going to do on this channel? We're going to buy that dip. We are going to buy that bottom at 5 cents, 10 cents, maybe even 2 cents, because it is going to go that low if they're not bailed out or sell the Bitcoin before then. It's going to happen 100%. And we're going to buy that. And if they pull the CEO out when that happens, and like they do a hostile takeover of the company, oh, we're going to buy that too. Because they're going to potentially sell. And by the way, once one company capitulates and starts selling, that it's over. It's over. The whole thesis behind these companies just buying and buying and buying and buying and never selling, it's over. It's already over. Sequins, ETHZilla, and it's going to be more. Meanwhile, imagine this. New treasury companies for crypto. We are now hearing NASDAQ-listed OceanPal raises $120 million to launch the Near token treasury company, planning to acquire up to 10% of Near's token supply. This is OceanPal, an $11 million company by market cap. $11 million. Maybe it's lower. It's lower since I pulled up this video. $9 million. And people are going to buy this and say, oh, well, they're just raised $120 million. Yeah, but it's probably, they're going to issue stock, so they're going to dilute the shares even further. Guys, we're so far at the end of the cycle that people are like, they can't even see it. Like, in my view, all of these announcements about this kind of company, this kind of company, this kind of company, it's over. And then that brings us to Ripple and XRP, because the situation with XRP is, it's not great, okay? And the XRP ecosystem seems oblivious to what is actually going on here. Circle launches ARK public testnet. This happened at the end of October. Circle announced the launch of the public testnet for ARK, an open layer 1 network designed to meet the needs of developers and companies bringing more economic activity on chain. Now, retail and institutional banks, as well as asset managers and issuers, are crucial purveyors of capital, credit, investing, etc. Lending banks and asset managers engaging with ARK, engaging with Circle, with USDC. Remember what I've been saying for years on this channel since I started talking about it with Cardano, needing USDC, and everybody, all the bulls in developers in Cardano were like, Cryptoviser, we don't need USDC. We're going to have our own stable coin, and it's going to be way better than USDC. Is it? Is it? No. The answer is no. And now USDC, these are the banks and asset managers engaging with ARK. ABSA, never heard of them. Bank Frick, BlackRock, BTG, Clearbank, Commerzbank, Deutsche Bank, Emirates, First Abu Dhabi Bank, First Rand Bank, Fiserv, Goldman Sachs, HSBC, Invesco, SBI Holdings. Well, SBI Holdings, that's another Ripple. We'll get back to that in a minute. Societe Generale, Standard Charter, and Wisdom Tree. So all these blockchains that don't have USDC, they're done. They're done because they're not integrated at this point. They're not getting integrated. And there's still bulls that are like, well, we're going to work on getting USDC integrated crypto. We're going to work on it. What the have you guys been doing for the last 5 years? Not trying to get USDC integrated on your blockchain. And for those who say, well, we've been working on it. Guys, Sui launched with it. Solana got it. Algorand got it. I think Hyperliquid has a connectivity into it. Like they're launching these new coins already with USDC integrations. And you're telling me these legacy chains were still working on it 5 years later? I mean, you guys get it. My viewers definitely get it. And we have been so ahead of this curve in the markets, so far ahead. We called these Bitcoin treasury companies at the top of the market. We called the top of Bitcoin. We said MicroStrategy was going to come down precipitously. And by the way, I don't even think that it's dropped enough yet. Like, it should be under $200 in the very near term, probably by the end of 2025. There's a very high likelihood of that happening. And then we hear this. Western Union plans a stablecoin launch on Solana. For those of you who don't understand the level that this is, okay, Ripple used to have a partnership with Western Union, and they chose Solana. Now, we're going to come back to this video on why Western Union chose Solana in a minute. But Scott Melker, the Wolf of Wall Street, said, I say this with no disrespect, looking for an actual answer. What is the current pitch for XRP, the token, not Ripple, the company? Western Union chose Solana for their stablecoin. Swift went with Linea on Ethereum, which was the selling point that I heard for years. And I would agree. For years, the XRP community said, we're going to be the the cross-border payment for the world. All the banks are going to be using XRP. Ripple doesn't even use XRP. Ripple is selling every single month millions and millions and millions, hundreds of millions, really, of XRP on the open market. Hundreds of millions of these coins are being sold by the company that's supposed to be integrating the coin, and they're not integrating the coin because RippleNet doesn't need to use XRP, and all of Ripple's technologies don't need and haven't been forced to use XRP. So this whole idea that some pie in the sky future that they're just going to, oh no, now that we have all of these banks involved with Ripple, now we're going to enforce that they have to use XRP. This is bullshit. And I would agree with Scott that they said it was going to be Western Union. Western Union chose Solana. They said it was going to be Swift. Swift chose Ethereum. Stable coins have clearly taken the reins for payments. So I get their stable coin being in play, the XRP stable coin. But what utility does XRP have? And the answer is none. That's really the answer. Somebody responded saying, I don't think it's been adopted anywhere near the scale that it's being promoted, as evidenced by on-chain volumes and data. But more importantly, what it's capable of. I think the crust of most investors in XRP is the money, but they understand its true potential and assess that its price value doesn't match its value. This is his position, he says. There's a deeper truth here to all of crypto. This is proto-money, a small story becoming a big one. A vast majority of price appreciation is driven by narrative and the social consensus behind it, not the tech, not the partnerships, but the promise of what could be. We are watching the internet of value being born in real time, and we're all hoping that our piece of it graduates to its full version or vision. He said, I personally picked XRP because of the reason, with the understanding that it's the strongest community in crypto. But guys, here's the deal. Like, a community doesn't create money. A community doesn't create value. A community doesn't create like technology and technological integrations with these banks. JP Morgan, Jamie Dimon doesn't give a shit that XRP has a great community and that they have, meetups and that they all share stories about, oh, I onboarded this person, I onboarded. They don't care about that. They're going to look at the data and say, wait, Ripple is selling XRP. Ripple, their technology doesn't even force the usage of XRP. So what is the point of XRP? But the community says, well, we're having a great time together, and good for you. But this is not investing. That's not how you invest, at least in my view. So he goes on and on. But at the end of the day, guys, I completely agree with Scott. Like, this goes into many different cryptos that we've talked about on this channel. A lot of them. Internet Computer, Cardano, Litecoin, Dash. A lot of these coins promised so many different things. And we as investors invest in the hopes that they're going to execute. But they alone can't execute, right? And sometimes it's completely out of their ability to execute. Like, for instance, I personally don't think that Cardano has, number one, the technology, number two, the usage, and number three, the regulatory clearance to get Circle, because otherwise it would have already been integrated. But it's not, and it hasn't been. And so when I see Internet Computer going the same route that Cardano went with not integrating USDC, not integrating Chainlink. Chainlink is an open ecosystem. Like, all the founders have to do is call Sergey and say, Sergey, we need to get this integrated with our technology because this is what we're doing for AI integration or whatever the situation is. But they're not doing it. They're not paying the integration fee. And maybe the integration fee just has to do with hiring developers to get it integrated. Either way, they're not doing it. That's not investable. It's not investable. But, it goes into MicroStrategy, right? The community is great. Like, I'm not saying anything, this is not personal, right, guys? It's not personal. This is about making money or not making money. Like, I don't care if you disagree. That's fine. I'm just sharing my opinion. But for the MicroStrategy community and some really smart people like Lawrence Leopard, like Josh Mandel, like these are very, very smart investors and with a lot of money. But in my view, they're going to lose a lot of it because they're falling into the bull trap of not understanding that Wall Street doesn't give a shit what Michael Saylor says. He could say, well, we're never going to have a bear market again. Well, that's bullshit. We will have a bear market. We will have corrective phases. That's how market cycles work. That's how they operate. And to Jim Chanos's point, he's doing the same thing that Michael Saylor's doing, shorting MicroStrategy and buying Bitcoin. That's what MicroStrategy as a company is doing. That is the whole thesis. And the fact that there's investors that don't understand that, and they're like, no, Cryptoviser, you can't short that. That's not good, blah, blah, blah. I can do whatever I want in my portfolio the same way you can do whatever you want in your portfolio, right? One of us may be right and one of us may be wrong. But that's the whole point of investing, right? It's the same thing. You go to a roulette table. You could think it's going to be red because the last 10 spins have been black, but that doesn't, every spin is independent, right? So it still may come up black and you may lose. That doesn't mean that I'm a bad investor for not putting it on red or black, or that you're a bad investor for putting it on red or black. It just is, that's your thesis. What we try to do on this channel is really understand the data, right? What is the most likely scenario? Are we never going to have a bear market again? No, that's bullshit. So why is Michael Saylor telling people that? Is this whole idea that you're going to get a tax-free if you just hold for 10 years and there's no other risks involved? Is that true? The answer is no. There is risk involved. And the longer you hold an asset, the more risk is involved. And not just from, whether MicroStrategy can hold that up or not, but there's other risks. Let's get into that. The other risk is that even if MicroStrategy performs fine and has no hiccups over the next 10 years, if you're holding for that long, you're getting 16 to 20% a year, but you could invest that in other assets that perform even better over that course of time with lower risk. And so people are not looking at that. In my view, the cycle for Bitcoin is over. It is over. And these stocks, even since I've been recording this one video in 30 minutes, the price of MicroStrategy has come down even more. And again, they haven't even released the earnings yet. The earnings are going to be the same that they were in the previous quarter. They're going to say, oh, well, we made actually $50 billion in unrealized gains, but they actually didn't make any money. In fact, they lost money. Wall Street is going to call the bullshit on that. And how are they going to call the bullshit on that? They're going to keep shorting this stock. And the holders, they're going to capitulate the same way that these Bitcoin treasury companies and Ethereum treasury companies are capitulating and selling to buy back their stock. Because now you're on Wall Street, and Wall Street will not accept continued losses and continued 97% declines in these stocks. I do believe Nakamoto is going to be taken over. Like the CEO, he's probably going to be pulled out at some point. Because if this stock goes down to 5 cents, you have to understand, there's investors like the Cardones, they invested around here in the $25 range, $20 range. Imagine going from $20 down to 5 cents. I don't wish that for anybody. That's part of the reason we started this channel. Was because I didn't understand how these markets operated. And I kept hearing people saying, buy the dip, buy the dip, buy the dip, buy the dip. And I kept buying the dip. And by middle of 2018, I think it was, after the bull cycle, most of my coins were down 90%. And I was like, I need to understand how this market operates. Because just listening to buy the dip, buy the dip, buy the dip, buy the dip, listening to, oh, well, no, even though Circle has all these banks and BlackRock involved, XRP is going to be used by the banks. They're going to take over everything. Well, it hasn't happened yet. And they're not even on the pathway to it. The fact that Ripple continues to sell XRP is, in my view, the same thing like MicroStrategy selling their own stock. That's so bearish. And in a bear market, it's even more bearish. And so we're going to be prepared, right? Because we are pivoting into AI. We are pivoting into some of these other tech type of companies. But I do believe that we are still, just based on the general economy and all these layoffs and stuff like that, I think in the medium term, right, over the next 6 to 8 months, we're going to have a lot of shakiness. But in that shakiness, this is the time to accumulate cash. That way, when the market does bottom, and we'll probably have an idea when it does bottom, right? We can buy up these stocks. We can buy up these cryptos. We can buy Nakamoto for 5 cents, MicroStrategy for under $100. And there's people who are like, it's never going to happen. We'll see. We will see. And I may be wrong. Okay, I may be wrong. The same way that you may be wrong. But that is part of investing. And based on the data that I see, and based on my calls all this year, and the ability of this channel, we called the bottom of the market in the previous cycle months before it happened, based on the macro environment. Celsius went down, Terra Luna went down, 3 Hours Capital went down, Voyager went down, all these companies went down. And there was one left, and it was FTX. And I didn't know it was going to be FTX that pulled the market down, but it was exactly 1 year from the top of the market to the bottom of the market, to the day. And we were prepared for that. And while every other YouTube channel was saying, guys, I think that we're going to see Binance collapse, we're going to see Grayscale collapse, we're going to see all of the Coinbase is going to collapse, every company's going to collapse, we were buying the bottom of the market because we were prepared for that. And I think that that's going to occur again, for sure. And we're going to be prepared. But right now, I would not be long the market, generally speaking, because there's just so many macro factors. I mean, NVIDIA hitting $5 trillion. I mean, for us to not see a correction, for people to think it's going to go to 10 trillion before it goes to 4 trillion, right? 4 trillion would be a 20% drop from where we are. 20% would be about a $160 price. There's a lot of money to be made on that downside, the same way that there's going to be money to be made on the upside later down the road. Anyway, I'll see you guys in the next video. Let me know what you guys think about everything that we talked about today, about the thesis about Ripple, XRP, the Bitcoin treasury companies, Ethereum treasury companies, MicroStrategy, and more. I'll see you guys in the next video. Give the video a thumbs up. And as always, crypto on.